Good afternoon, all. This is Fari Hemzi. It's Wednesday, March 2nd, 2022. And it's at 5:09 p.m. Thanks for joining us. It's a very quick midweek market time webinar, our regular time slot. And as you know, when you sign up with GoToWebinar, it reminds you, including any change of time that would happen and so forth. We did a quick one last Saturday. It had a huge amount of hits on YouTube. How to find it is simple. Just go to the homepage, our videos. Used to be a second one, we switched it to. But between the blog and videos, they're both, of course, run by Google. Yeah, 141 hits, yeah. So it goes there. Best thing is to subscribe. And this way, wow. This way, the moment last week we had 1.2 something. Wow. It's just that the moment we post something, you get it. Usually it takes a few minutes. It's like 15 minutes for every hour or something. Post processing. After that, we post it. And then, of course, we have a list of the people who joined for this meeting. Assuming your email is correct, we send a copy of it for you there too. All right. So why don't we get started here quickly? And let's go to economic calendar. As you know, today was the first 2 days of Humphrey Harkins' testimony by Comrade Powell. And sorry, I'm going to call these guys Comrade. And the market wanted to hear that he's going to be soft and gentle. What Bush used to say is one of those. Kind and gentle. He was going to be kind and gentle. That, of course, means more free money for the hedge guys. So they loved it and they rallied up. Interesting enough, as I will show on the chart, it didn't get to the threshold I was looking for. And one of my better traders out of Chicago, we've been looking at this for like last 2 or 3 days. It never got there. So is it bull trap? I don't know. We'll see. It definitely feels like, tastes like, looks like bear market rallies. They're sharp and then they're killed. So we'll see. But on the calendar-wise, Bullet spoke today earlier. I missed Beige Book, but I don't really care for EIA. But tomorrow, jobless claims, obviously, productivity, and PMI not so crazy, but I want to see factory orders and ISM services. This is going to show some inflation there. Then he's going to talk again. That's Jerome Powell at the House. I'm sorry. I think he talked to the House today. Tomorrow is Senate, so it'll be from the Senate. And I got this wrong. I got it wrong. Yeah, I think the tough one is going to be the senators. They're going to be grilling him because of inflation. So there's no surprise that the Fed is behind the curve. When has it been? Give me 1 year that the Fed has been proactive. Give me one. In the last 50 years. Okay. I mean, I didn't know what Fed was until my first economic class, but let's say mid-70s to now. Give me 1 year they've been ahead of the curve. Now. So that's not news. So we'll see. The fact is that with Admiral Tico, our beloved leader, looking for 120 on oil for what? How many weeks now? He's been pounding the table. 120, 120. Now it's coming in. You know, the news is coming in, and we're going to get into that shortly. And you'll see it's just dramatic. That's a dramatic day in there. Let's see what estimates are for tomorrow. I'm saying for Friday. As you know, it's an hour earlier, so we'll be in our chat room earlier. Okay. Any of you guys want to come to the chat room? Send me an email just for Friday. We'll invite you in. Not a problem. 390. Now, excuse me. Before we go there, I lost my train of thought. ADP. Let's look at ADP. Now, remember, these time series are highly variable, a lot of noise in them, and it's the issue of really the revisions. What we look for is where the revisions are. You could see this as an example. 301 was revised 509. That's huge. From negative 300 to plus 500. Consensus for today was 320. Look at that range. I look where it came in. So if this is any indication, and sometimes it is, I should emphasize, sometimes it is for the non-farm, then this could be very strong, very strong. And so that's, I think that's all Fed wants. Because that's because, hey, we got to go forward. Now, the estimate is a little bit on the lower side here. I don't know what well, we don't know the part until Friday when the revision comes in. And also, these go back another month typically, so you have two revisions. So we'll be looking at what the data was for February, but more importantly, what were the revisions are to December and January. All right? I'll look at privates, but I'm interested in really manufacturing, housing, and the healthcare. That you won't get here, but you can go to BLS.gov and see it. Usually it goes now. You gotta give it a little time. Once the data is not quarantined anymore, at 8:30, the servers are really busy over there. You gotta give it a little bit of time. We'll keep hitting that refresh until it shows up. But that's by the time you probably get there, the talking heads have it too. So we shall see. But take a look at the manufacturing, healthcare, and housing. Those three are crucial. We'll see what correlation goes between ADP and privates here. Okay, this includes government, non-farm, also includes government. Okay, that's for this week. Next week it's the second week of the month. So you have CPI, PPI. The following week is an expiration. That's a big one, and the Fed meeting. Fed meets on 15th and 16th. 18 is the expiration, and then after that you're gonna have durable goods and GDP and so forth, which is the final week of the month. So that's how the economic data is stacked in front of us. Okay, next, let's go through some charts. Okay, by the way, this is what I'm talking about. This is crude oil for April delivery. May will go lead. So not at least 10 days ago. Yeah. It's what at least that, maybe. Yeah, at least 2 weeks ago. I think they wrote it on 17 or 18 of a month from the first notice date. So this is this a little bit, we're kind of halfway through the month, but you could see where we are. If I switch this and go to daily, you see the impact. I mean, that's a 4 sigma reading. This is 4 sigma. Just barely missed it up there at the high of 112.5. Yeah, so dramatic couple of days. By the way, let me say this: if you don't have the stomach for what you see on TV out of Ukraine, you haven't seen anything yet, and you're going to see some atrocities that only Red Army can do in the next, let's say, 2 or 3 weeks. So I think political winds out there is going to get swayed. So, and we're going to be all sick to our stomach. Okay, let's go through timing chart. This is the level we're talking about. Actually, more you can see on the ES. The ESH22 as a daily. But roughly, it translates to this high. Let's see, that's Thursday. That's the Monday. Not Monday. Yes. Yeah. No. Yeah. Actually, this high. Okay. The Monday high with the Tuesday high, because Monday was President's Day. Now, on the edge contract, because there was some trading, we don't see it there. It was like a millimeter. Remember, it was halfway there. That high we have not exceeded yet. That was a line in the sand, which is translated to cash at about 43.93. We popped through it, but we didn't close. And of course, we were pushed down on the futures right now. So now we went on this trade that I showed you here. We have no problem discussing it here. This is PMT. Remember, we post our charts. And I'm saying here with you. We update. It's on YouTube and all that. But the trades go on the website. Okay. This is the trade. You can see what time we put it on. But 2:30 on yesterday, Tuesday, and we're not gonna take it off. No, we have time, plenty of time. We're not. Hold on. Oh, actually, I'm sorry. Did we get close? Oh, we got stopped out. That. Oh, geez, hold on 1 second. I missed that. Hold on. That's okay. That's okay. Hold on. Let me go back. Yeah, we got stopped out based on catch. Yeah. Wow. By 1 point. Okay. No worries. No worries. We'll re-engage. I don't think this chapter is not written. Yeah, I don't think so. To me, this is a bear market rally, and they just bring the sheep in because of a couple of things: oil, interest rates, and Fed, and of course, what's going on there with Ukraine and or Russia. I mean, that's why I put the first chart up here. And you see what happened with the Russian ruble. I mean, this is, if you go back, you can see what happens. Okay. You go through these, and now you have no reserve. The reserves are taken away from you. Hard currency reserve. You're done. And we haven't even touched this oil and gas sanctions. So that would be a chokehold. That would be it. Russia would go back 100 years. This is the economy. Yeah. So it's very, very sad for all sides, but somebody's going to be made an example of, so people learn a lesson. There's an argument out there that this was a setup. I don't know. I don't know. And you can always have some issues like that. That we kind of drew them in. I don't know. Yeah, they didn't. We didn't say anything until he came in that we got him. I don't know if that's true, but if it's true, that means we're very smart. I don't know if we're that smart. Okay, but the real fact is that he took the bait. If that was a bait that he took it, and I think now we're looking for a Julius Caesar moment, a path to, it's a bullet or two by one of the generals. So because everybody's so upset, we shall see. But personally, I think the son of a bitch for what he did to this country in the last 5 years and what he did to Chechnya. Get rid of him. That's not a secret. I've talked about that everywhere. Okay. On the long side, the good news is that the transportation took out the 200 debt, closed above it. Okay. We have not done that since this period. About a month. And was there a little diversion there? I mean, Bush diversion? Yes. Yeah. Okay. Now, make sure. And the surprise was that yesterday was our sidebar. Look, it came and engulfed that. So that's good. The bigger problem is the techs are not. That's not tech. That's utilities. This is a flight quality. But the techs are not doing that well, and the Russell is still very, very low from its very, very low. So let me go back to here. You can see can't even go through 0.6 yet, and we have death cross. Okay, as we go here on the detrenders, you'll see very clearly we have a death cross now. So I think it's just a matter of time for some of the larger boys, portfolio boys, not hedge guys, but pensions and so forth, try to start selling their techs. This is just the beginning of it. So they have to. There's contract. You just can't sit there. How are you going to explain? You stand a chance of losing your bonus and mainly even getting your pink slip, not to come back again. So that's going to happen. We got to look for that. That's a very good possibility. Russell's already done that, and you can see what happens. That cross came. It really speeds up. Not in translation yet. We shall find out soon. And we have still some room there on the S&P. I can't believe they hit me. Son of bitches. Yeah, they did. 4401. Yeah, all right, that's fine. Maybe I put the stop too late. Too small. That's okay. We can always re-engage. So we'll see. Well, okay. VIX and VXR. I'm sorry, VXN. We're not going to be able to go down without this retest of these levels and our sigma levels, actually, more than anything else. Not just the level of the VIX, but the pattern of the VIX. based on its wall-of-the-wall chart, which is the sigma challenge over VIX. The high up there was 37. We had predicted we could hit 38 based on sigma levels. We only got to high 37s, never got 38. The goal was 40 to 50. We haven't gone there. Now, yesterday, somebody asked me, what, so we're not going to, I'm sorry, day before yesterday. Are we going to 40 still? I said, not in this leg. I mean, you know, when you turn down like that, that means you've had these two bars. You got to be realistic. Your past projections are not necessarily going to come true, and you have to stay flexible. So, do I still think we can go up there? Yeah, but we need a little bit more time. I think we need a little bit more longs to come in, and then they'll lower the guillotine. So they're still sharpening the edge of the guillotine. Okay, it's not. I don't. It got a little bit blocked down there. So yeah, right about this area. So they're just getting ready for the next stage. I mean, you just need to go back to the history of Fed raising interest rates. Now, even though nominally those are very small amount of interest rates, it's just that when we have so much fluff, such as PEs and NFTs and this and that, all these signals, when your Uber guy is telling you, giving you a trade, okay, you gotta say, okay, we'll maybe extend it. So it takes some of it off. It's healthy. I don't think we've seen that. We'll see. The other factor is Comrade Trump. He has asked for people to protest in the streets, just like they did in Canada. If Letitia James are as nasty with me, law. It was nasty anyway. It's the law. When you're a common citizen, you don't have the immunities of the Oval. You're going to be treated just like everybody else. And so, to me, that's the last thing we need right now. For major cities to be encircled by truck drivers. And he's not disclosing everything, and as usual, less intelligent and less read people follow him blindly, and we could have another problem on top of it. So I look at it like the three amigos. We have three comrades: Putin, Trump, and Powell. We'll see how this thing works out. Be defensive. The simple translation is: look at your portfolio, get rid of your borrow names, products, management, and balance sheet. Any of them have a flaw? No good. Get rid of it right now, for now. I think Russell should tell you that. And then you can always go there. You know, there's some data that shows we should be on a price cycle low somewhere in late March. There's some additional comments coming from people with that realm that say they really don't think we're going to be in an up mood until probably last couple of weeks of May, mainly in June. Finish the dime, it doesn't, including yours truly. So, price and volume. Let's see what the chart shows. There's no question we're very bumpy. All you need to look at is the first hour and see what the ATRs are at the open. They're wild. I mean, down here, we were hitting 60, 70, 80 ATRs on a 3-minute chart at the open. Just impossible to win. So whatever you take as a position, wherever you are in this bar as an entry, it guarantees you're going to be a loser. Guarantees you're going to be a loser. Because it's just the gyration back and forth. And where do you put your stop when the ATR is 75? Think about it. So we have some bump in the road. Just be cognizant of that. I should note that's the first time in a long time that this has gone short. The weekly model. Last time we went short, it was off. It really didn't. It was only good for a few hours. This is the Friday close of the March 20th, 2020. You see that, and then we reversed Monday night. So in terms of actual cash trading, it was 5 or 6 hours correct, and then it reversed. This move did not come on Monday; it came on a Tuesday. This is a weekly bar, but part of that Monday, this signal was good. After that, it reversed. So. But we've had signals in the past that was good. If you go back to 2018, the signal was good. So it all depends what kind of bump is ahead of us. We'll find out. I just think that I mean, I have another signal. A friend of mine that hasn't touched the stocks, and his background is really medicine, and he's very good at medicine. Last night called me, he wants to go over his portfolio with me, and they're all small positions, nothing fancy. And I said, I didn't know you were doing this. How are you doing this? Well, because the last couple of months, I think it's time to get in. No, it's not. When the Uber driver is giving you trade ideas, watch out. That's a little. It's like it reminds me of the Shoeshine Boys at Union League in Chicago. When they're giving you, you got to be Samsung, you got to be buying Tesla. And you ask them, what do they do? They have no idea what Tesla does, but they know it's a Tesla. Okay, fine. There could be a signal. So we'll see how this works. I think a little bit of adjustment is good. My biggest beef here is really PE ratios. They're fluffy. Get those oriented, lowered a little bit. Two ways you can do that. Price comes down or earnings go up. Then we'll see where we are. Inflation is a different problem. And gold, not gold, but oil at 112, or let's say Tico gets his number, goes to 120. That's not going to happen. That's not going to happen. I'm willing to stay. You're going to probably see $7 or $8 gasoline in New York and California. Yeah. Those guys are not going to forget it. We're paying 5.5 here, I think. I don't know today. Let's say. I think Sunday was 5.5, so it was premium, not. Okay, so here's SQ. Came in. This is the tail risk of the SPX puts. It's a downside risk. Yeah, sorry guys, I'm a little bit tired. It's been a very, very gruesome 2 or 3 weeks. So we pulled up a little bit. This is right after the close. Remember, this report once a day at the close. I forgot what the ratios are, but I'll show you where they are. On the, let me go back to the archives. Let's go back a couple of these. Hold on. Is it yeah, there we go. If you go here, there's the risk, and it's printed from the CBO's white paper on SQ. So what are we doing here? What's SQ here? 136. Okay, so we have 11% chance to move 2 sigma channels from here. Okay, and 2% chance of 3 sigma. So let's put observer price. So if we move 2 sigma, it is we have 11% chance of going to 4132. The 3 sigma is 2% chance. Okay, so it's not huge. It's not huge. Why? We're too low. Wait until this creep up. Yeah, that means that what this is saying to us, that as we came down here, they took some off. Let's see. That says that past this point, some put activity has started again. This goes up, the put activities up, and sigma levels, that's 139. Remember, design limit is 100 to 150, and this is all-time high, 170. Okay, so we got in last July, 2018, in August, and then the late December 2019. These were perfect. That signal was perfect. Within 60 days we unraveled. This is not there, and I think we already see this move from here to 60 days. This is December 29th. So I think this sigma is gone. Are we going to build to another sigma? Probably if we go up. We go up, they're going to buy some puts. Why deep out of the money? Because they're cheap. Yeah. We're holding some SPXs for end of March and some on end of, I'm saying, not end of March. March expiry and April expiry we have. And then we put some SPY puts on, as I showed you. Okay. TD. All right. Again, this I had not seen before. This was Thursday night or Wednesday night into Thursday. We had a sharp up over the Sunday night, this huge gap down. We have tested it a couple of times, got close to it, and now we're here. This should pull up. The reverse is happening here because this is the volatility asset, so it's going to be reversal. Cash. The internal of SPX shows that Uh, we're getting very neutral right now. We're around 50. Sell programs should kick in around 25. Buy at 75. Or if you want to look at the other way. Yeah, over up here becomes exuberant, and you want to sell it above it. Below that, people are very, very pessimistic, and the continuing players will try to nibble on some positions. So that's obviously too. Again, this is +2. Don't forget this spread. That's a 3-month spread. It's +2. That says we're oversold already. And when it hit this level, you would know there was a big, big, big push to the downside. When you're hitting +5, I mean, we haven't seen that. I think last time we saw that was in March 2020. So very, very, very bad sentiment. Treasuries rallied today. Here's the yield. Remember, this is the yield. I'm sorry, Treasuries sold. The yield rallied. I'm sorry, the yield rallied. This is a TYM. I'm sorry, YTM. Yield to maturity. So it's not a future contract. It's actually an index for the lead contract implied rate that's transmitted by SIBO every 6-7 seconds. So we rallied pretty decently in the yield, and both 10-year and 5-year. I'm saying 5, 10, and 30. What do we do here? Nothing. Okay. And this is the one that's most controlled by the Federal Reserve. It was kind of inside there. Okay. What else? Okay, let's go to this chart. Okay, forgot, by the way, on Sunday to review this. My bad. Okay. Yeah. By the way, anything you shop, they'll figure it out and put it here for you. Let's see, not there. Let me put this one. Yeah, let's make it one more small. Okay, good. All right. Is this today? Yes, it is today. Okay. No, it's not today. Today has not come. There we go. Now it is. Now we have today. Okay. Again, what I've talked about here to you guys always, look at the separation of the two moving averages. Look, they're getting wider, not less. We cannot get through the lower band. This is a 20 bar. This is 50. We can't get over that. It just pops it and then fails. So I'm afraid path of least resistance is down, not up yet. Why? Before it gets up, you're going to see something like that happen. These two getting closer and then maybe across. We're not seeing it. So is it a rear view mirror? To some extent, the moving averages are, but not the value. And what's the value for? Number of stocks above the 200 moving average. So, and we're below 45. We're at 45. Yeah, we're at 45. 55, 45 is basically known as a neutral zone. If you follow this, I've been doing this since like 2008, this chart. 2009, actually. I've learned it from another webinar, which I was an attendee, taking notes in Chicago. And I've looked at it since then. You've seen in all of our charts. We post that. We go over it. So right now, for me, path of least resistance to the downside, unless I'm proven otherwise. So stick to it until you're proven otherwise. I would keep it on hand ruble because it's getting better a little bit. Last few hours, it was really up there. Today it was I think 14 if I'm right. Let's see. Is there anything else I need to go through? Yeah. Now, obviously, another good confirmation is if we get over 200 day. Okay, that would be a big confirmation that the worst is behind us. I don't know. I don't think so. Now with that cross, and as you know, there's a big number of NDX numbers because that's only 100 names. In the S&P 500 names. So the correlations are holding and will be impactful. One last chart, we forgot to go over that. That's Larry. Again, for this to be understood, we do have a PDF. We suggest you guys download it. We have given it away. We've shown it to you. It's a work by Paul Desmond, the president of Larry Research. And actually, there are two guys much better than me. I'm learning from them. Bo and I think, is it Peter? Let's see if you go to, let me see. Bo used to be active with us quite a bit. They got a huge project here. His family business is just eating all of his available time. By the way, I understand these are ordered by Bank of Russia. Let's see. Hold on. Okay, hold on. There we go. It's Walter. Yeah. I'll give you his. There we go. Walter Deemer endorsement. You should be following these guys. They're very good. And they do their interpretation along, which basically I'm the grunt. I do the charts and little commentary, but Norseman Bo is really, really good. And so is Walter. Walter's an old hand in this institutional investor analyst. So basically report to, bank traders, so to speak. They're very good at that. It's a modern way of reading the tape, if you think about it. And here's we post hourly. But I know those guys go and look at it on a daily basis. Where you get these sharp moves, there's no washout. Bottom line is none of them, including myself, are saying I'm not. Of course, I'm not in their category, not in their class. They're very well taught about this. They're calling this law as a washout. Now, we all do that on SPX. Keep that in mind. Everything is done on SPX. It's 80% US equities. But you can transfer that or extend that to also the Russell and NASDAQ Y. They're highly correlated. But none of us believe that this was a washout. The volume data doesn't support that. We typically want to watch baby with bathwater thrown out of the 10th floor. We're not seeing that. So, do we gonna have more pain? I think so. Oh yeah. And there's a school of thought that says this could continue into let's say June. I don't know if I would go that far, but April is definitely part of May. Yeah, probably. Now, usually mid-May is a high. Seasonality, doing work on seasonality. Mid-May usually is a high, but it could also be inverted. So we'll see. We'll see how we get there. By the way, this is not 200 day. That's the 0.6. That's 20 day. I'm saying this is 200. I mean, it's not 50. 50 is we're the same cost. 50 is cyan, and we don't have death cost there yet. But you see what happened there? Yeah. Expect more cap selling, big cap selling this week. So just day after contract wise. So what else I have for you? This is the this is the work actually Peter did, our moderator in our chat room, and you could see that it covered it had a short there, covered it, went long, and then got kicked in it, once yesterday, and that's open today. So because these are trend following, and this has to do with a lot of this data, because they're trend following, that first bar is dangerous because you're selling the bottom and buying the tops of the bar. Okay, but if you can withstand that first day or second day, usually these don't miss. So that's real. Short again. This is confused, but that's mid caps. By that definition, it's confused. It could be the other way. This is right and that's wrong. Time will tell. Now I would say this: in case of ES, the longs have done really, really well based on this timing. If you go back, you'll see. As a matter of fact, that's how Peter runs it. No short, long only. So long or flat, never took the short. And then you have this is mid cap, Russell, and then NQ. You could see that Russell is long and a mid cap, yeah. But these two are short, so confused, yeah. Oh yeah. It's 50-50, so I would be careful on that. What else do I have there for you guys? I would be of interest. Let me see. Yeah, that's one of my babies. Yeah. Okay. Let me explain this one. I don't suggest you guys get in because we passed a little bit, but here's the current PMT issue. Here's the trade. We do not send the trade out so people cannot email it to each other. We just send the email saying, go check the system, go log in. And you log in through members. And depending on what package you have, you have more than, if there's more than one package, then you have to go through this stuff. Otherwise, it lands there. This is PMT Pro. There's the performance. Here's the levels as of the time it went out. And this is the trade. We hit up stopped it. But that was a huge move. That's 90 handles. So we're going to go back and re-engage it. That's not a problem. We never got to 42.20. So no worries. These were April 1st. So now hold on. I forgot as I opened. You saw that was honest. That's opposite. I wasn't trying to tease you, show you trade, and say, oh, by the way, you can't do it because already hit. No, I didn't know. I was surprised to me. We got close, but I didn't think we hit it. Now we did. It's just been very, very, very busy here. Work, time, sleep very low, and a lot of market situations, also some software development. So we're just going to re-engage. We're going to just re-engage. Most likely, let's say, Friday afternoon. Yeah. Or, and because we're far out enough in our expiries, it doesn't matter. The weekend won't matter. But most likely, why? I don't want to go into a number with a position. That's not good, especially short term. With let's say weeklies. A lot of times we do these weeklies because they're a spot. You can do it and liquidity is very high. But I'm not going to go into a non-farm with a weeklies. But I do it afterward. Let's see how the expects to do. What's the estimate? How did it relax? What was the number? How did it relax? They can put a trade on. And this one we put out in about 20, 25 minutes. Why? Because you get the webinars here, the charts, an explanation. That saves me so much time, you have no idea. And then, of course, we share this part. It's okay. You always have to give back a little bit. I've been very lucky. And so, but my mom always taught me that you can't take your brain with you either. So, I share a little bit. But yeah, it gets posted here. All right. And then if you are with us on the, we post here, for example, we post here. Right after chart, just to remind people saying, listen, we'll go with these charts. Here's the GoToWebinar. If you follow us on HA, you're going to see them. And it's cumulative. You just sign up once, it reminds you. You want to come, you come. You know, you're busy, you don't. You get the video later. Okay, that's my spiel for today. Any questions for me? Bottom line is, I don't see we've seen the washout yet. If you want to buy something now, you better sit down and write down your reasons. Again, 3 items are crucial, right? What do you call it? Management, balance sheet, and products. And I would add one more small layer to that, dividend paying. They tend to hold their value a little bit back because you're bottom fishing here. Be careful. ZB, you need the 30-year bond future? No, not the contract itself, but I did go over it here. If you had a short, you did fine. Yeah. Well, part of this was the market rally, so the yield had to go up, right? So this reaction, so really flat. Mainly because Carmen Powell was kind and gentle. We said we got to be extra careful. Well, yeah, he probably will be, but maybe the first round. They're going to do several of these. They have to. Yeah. So to me, biggest Ponzi scheme out there is the treasuries. So I'm not saying they're going to crash like a Ponzi scheme, but they have a lot to give up. Yeah, so that means the yield go up and face value drop. So if you were short, that's awesome. That's awesome. Proud of you. Yeah. I never traded 10-year. Didn't have the patience for it because of the move wasn't much, but I did trade quite a bit at 30. Yeah, I'd say probably about close to a year, but the swings were massive back then. And Clinton had just come in, and I forget Wayne. I forget who was the Secretary of Treasury back then. The guy from Texas, and wow, it was wild. Remember, you had 1% down, right? It's 1 to 99. It's massive leverage, and so one small mistake, it's a problem, and then it takes you weeks to come back. I mean, my first trade was a disaster. I didn't know what non-farm payroll was. And my account with Morgan Stanley, they're just laughing at me like, really, Ivy League boy? You don't know what non-farm payroll is? You know, I said, give me something to read. I had no idea. I mean, I never looked at it like that. And the problem was I put some positions on, went in there. It was my third day of trading futures. Needless to say, they cooked me. Yeah, they cooked me. It took me like a month to come back. Yeah, to get back to normal because you freeze. You freeze when they hit you like that, especially early. Now, hey, we're trading in Q now. Yeah, so you get numb. You get comfortably numb, as Led Zeppelin. No, not Led Zeppelin. Pink Floyd reminds us. What was your reason to be short? Because of chart pattern? Remember, with the Fed talking, that was a gutsy move you did. Yeah. And he was very soft. He was very soft at the beginning. Actually, if you look at the chart, right before he started, we rallied up a little bit, then it dropped, then it got to the rate discussion, then the market started. Talking about the SNQ. Yeah, it was a wild start there. Any other questions for me? Hi, Thomas, how are you? Oh, too short. Oh, I see. Yeah. Okay. Yeah, good for you. Hey, David, how are you? David and David. We have two Davids there. Good. Okay. Any other questions for me? You know, Sherry, what matters is that how you did, right? Winners have a lot of takers. Losers are orphans. So good for you. Good for you, my friend. All right, let me shut this thing down. I got to take Admiral Tico for a walk. He did good on his crude oil estimate, and then we'll see how things go. Now, be on the look. We may again do it Sunday night. We'll see. I don't mind. As long as we keep it short, it's a good thing for me too because I got prepped for it. I got to look at some stuff, and then come and talk to you guys, so I don't make an asshole of myself. As Feynman said, Professor Feynman said that the guy who was mathematics genius at Princeton, he worked on the Manhattan Project. He said that he won a Nobel Prize in physics. He says, if you want to learn something, go teach it. Because if you got to get yourself ready to teach, you better know your subject really good. So I've been trying to practice that, and I think it's good. So don't be surprised if we get a comment out there saying webinar on Sunday on Twitter or what have you. And if we do that, I'll just change the date on the next webinar because these are sequential. You already get an email. The moment I do that, the email goes out, you would know. If I don't, then I'll remind you for next week this time. Okay? Dave, bravo. Yeah, ECB. Great. Thanks, Dennis. Good night, everyone. We'll see you. We'll keep it short and brief when we get to a point. Okay. Basically, all the price and volume, that's what we can go by. Cheers.